So, hi, Jim. Thanks so much for coming on a call with me today. I wanted to introduce you to some of my clients. So, Jim Friesen is a partner and co-founder of Portage M&A Advisory. He's also an MBA, CPA, and Jim, you're just a wealth of knowledge where it comes to M&A in private businesses, which is definitely a blind spot for our team. So I'm really excited to have you. I think it will be really interesting to our clients, as most of them are small to large business owners in the Niagara or Ontario at large. So thanks so much.
Thanks for having me. Really excited to chat with you today.
Yeah, so kind of one of the ideas and why we really wanted to have you was stock prices have gone crazy, housing prices have gone crazy, houses and stocks are turning over more quickly than they ever have. And I was really curious as per whether this extended into private markets and private M&A.
No, that's a great question. And this feeds in nicely to my first slide and talking about the Canadian economy and what we're seeing with our M&A lens. I mean, we're looking at unemployment likely similar to you because, unemployment rates affecting various industries. And we're seeing them affected or a lot of the downtick is coming from the accommodation and food services sector. So it likely is impacting some of your clients, given that you're in Niagara. Some of the other things we've seen too, travel and hospitality, obviously those industries have been hit really hard, and we don't really expect them to go back until 2022. And once the border opens and people get comfortable traveling again, I think those businesses will come back to life pretty quickly. But that definitely affects, the transaction. So if you're a business owner in that space, you're probably going to sit tight at this point, or perhaps you're going to start looking for some distressed opportunities. And then lastly, I mean, we always look at the bank too, and the underlying piece in all these transactions is really bank financing. As well as the profitability of the business. And, based on what we're seeing, the Bank of Canada is going to continue to work with stimulus packages. They're going to help businesses navigate the pandemic. Some have benefited more than others from the stimulus. And from our perspective, as long as banks keep lending for these transactions, there'll keep being some good M&A activity.
That's actually a really interesting point that I didn't know before I actually met you, was that a really big piece of how private businesses are valued is how much lending the buyer can qualify for when they're going to actually make that purchase. And I didn't really know that because it doesn't really come into play when we're doing public market transactions.
It's so true. And I think that's one of the pieces that we spend a lot of time educating sellers on is even if you own a larger business, you've probably heard the term, you're going to get what the market is willing to bear. And I think the way I've interpreted that is, if the bank sees the business as a favorable, profitable one, the bank is typically funding 60% of the transaction. So, I mean, they're taking on the most risk. So it is a key piece at the end of the day. Typically, there is seller financing through a VTB, and there is some buyer investment up front. But we've yet to see larger organizations come to the table and pay 100% cash, even if they're strategics, because usually they have, other places they want to put their money. So as much as some of these valuations are great to have, when someone's doing a desk report, it's also critical to talk to the banker and talk to lenders and see what their appetite is in that industry, because that will certainly impact the valuation. Yeah.
Great.
So just a few more points on the Canadian economy, and I don't think this stuff is really all that surprising. I think it's been blasted all over the news, but there's a huge contraction that took place in 2020. completely due to COVID, and it hasn't been like this since 1945. And the way we're looking at this in terms of valuation is, if businesses can get back to pre-COVID levels, then the the value of the business will be what happened pre-COVID. And if COVID has decimated the business and it has crippled them permanently, then the value of their business moving forward will be impacted negatively. And so that's the way we're viewing this, the COVID and the contraction in the economy. So a lot of people will ask, with respect to valuations, what does this really mean? If your business gets back to normal levels, you're okay. If it doesn't, you're not okay. So it's kind of a case by case basis. And to the next point, like 2020 recovery really depends on the vaccine, when the borders open, and the level of comfort, right, for people to start moving and traveling again. Um, you know, some countries have done a really good job. I think about Japan, um, just managing the virus and the spread, and you can see that there's been a really quick bounce back in that country, and we expect the same in Canada. Um, right now, the key really in Canada is getting everyone vaccinated, um, and then we'll expect to see a pretty good bounce back. Um, End of this year, likely in 2022, based on the industry you're in. Um, Again, I think there is a lot of optimism right now on our side just for the back half of 2021 and 2022. We're seeing a lot more activity, and I think it is because there is a light at the end of the tunnel. Whereas prior to having the vaccine, there was a lot of uncertainty. So it's good to see a little bit of optimism.
For sure. Lots of optimism on my end as well, that's for sure.
And perhaps it relates to the stock market as well, right? Perhaps people are getting more comfortable jumping back in and releasing some cash.
Yeah,
I know that's your space, but I imagine it's somewhat similar in that regard.
for sure.
So if you are a business owner and you're looking to sell, the good news is it really is a seller's market. And, it is counterintuitive. What has really happened is, you've got fewer profitable, stable businesses that are being pursued by the same number of buyers. And that's really what has created this dynamic. And if you look at the table at the bottom, what you can see is Q1 2019 and 2020, it was relatively even. And then Q2, Q3, you see the drop off, and that's the COVID effect. But by Q4, look at 2020. There's a huge uptick. COVID's not going away. Banks are still lending money. Let's get back into things, and you can see the release of the pent up demand. So when people come to me and they say, hey, is now a good time to sell my business? The way we typically look at it is if you're in an industry that has bounced back or has been relatively unscathed, it is a good time. There's more competition, and you're going to see in the subsequent slides, values have remained really constant. The deal structure might be slightly different, but with everything going on, it still is a seller's market. You could get some competition coming to the table. You're not going to take a hit. So it's very positive in that regard. There are some businesses, unfortunately, that haven't done as well. And if they've got the ability to ride it out, we really anticipate some of them are going to see a sharper turn. Like if I think about accommodation businesses, for instance, you know, I don't think anyone would forecast that these businesses are never coming back. It's just a matter of the timing. When can people start traveling? We see a lot of people who are really eager to travel locally. You can't find campsites right now. It's hard to find various things to do this summer. So I think the demand is there. It's just a matter of when people are capable of starting to travel and get back into the accommodation industry.
Yeah. That's a really interesting point that you'd made about people looking for high quality businesses, and that if you're in a business that hasn't really been impacted or a business that's really bounced back, that it's actually a really good time to sell. Where going into our conversation, I kind of thought, oh, maybe there's a lot of activity in those distressed sectors where valuations have come down because people are really shopping and trying to find some opportunities for value. But like you said, they're kind of just holding on, waiting for their opportunity if it if slash when it comes for more favorable time to sell, which makes sense. It was just not maybe what I expected going into our call.
Absolutely. I think a lot of people were really interested to see how the pandemic was going to affect M&A. And, you know, it took me by surprise too. And what I've learned is that COVID's been a bit of a stress test. The good businesses can now show their true colors and they've remained relatively unscathed. There are some good businesses that have been affected, but they're in the wrong industry, and they will bounce back. But you know, the businesses that weren't performing well pre-COVID, you know, those really won't be impacted from a valuation standpoint. If their profitability was poor pre-COVID, you know, it's not like the value will really increase or decrease. If they took a hit through COVID, it'll be even more challenging for kind of those B player businesses to sell. Banks, on the other hand, have pulled back to a certain degree, and we're going to see it on a subsequent slide. You know, banks want to fund transactions that make a lot of sense because they carry a lot of risk, especially when it comes to the middle market. So oftentimes when we present a B or a C type transaction, the bank is really hesitant to finance those. So, you know, for businesses that are kind of B and C grade, now is a tougher time to sell, no doubt. And you know, really what this slide shows you is that, you know, some businesses are affected and they will bounce back. So what you can see here is the growth expected in 2021. Obviously, if the vaccines get into arms, you're going to see a huge rebound in entertainment and recreation. Same with accommodation and food services. So I think a lot of this will be dependent on the vaccine and when the government starts to open things up. Other industries, you know, are less affected. I mean, I think about construction and some of the projects that are going on at the municipal, provincial, and local levels. People seem to be very, very busy. This could represent organic growth. So a lot of them, you know, aren't going to experience 25% growth necessarily because they've been busy and haven't really taken a hit in 2020.
Yeah. And that 25% growth, for example, in accommodations is because their business was down to 80 to 20% of what they would typically do. So it'll really take, based on this graph, kind of my takeaway is it'll take a lot more than just 2021 to get back to where arts and entertainment and accommodation and food services were pre-COVID. But that they will see pick up this year relative to last year.
That's right. And I mean, in those particular industries, we're hearing statistics that, you know, it's going to take till 2022 for them to get back. And I would say from a valuation perspective, it's not really going to affect them. I think the COVID should really be normalized if they do get back to those levels. So the good news is when the industry does open up, the banks will be lending money and the buyers will be lining up for those businesses. But we have seen some buyers come to the table and they've been a little bit less reluctant to pull the trigger in some of those high growth, heavier hit areas like food services, only because they can't really time, you know, the release of the bounce back. And so, you know, they would rather do a wait and see approach. Whereas some of the other industries, you know, they're chugging along, they're doing well. People are less reluctant to not close a transaction at this point in time because there is more certainty. This is a slide here that we look at as M&A folks to really gauge level of activity across North America. This data was provided by GF Data, and they look at the number of transactions above the 10 million in enterprise value. And what you can see here, if you look at the number of deals, similar to the table that we were looking at previously, you've got 92 deals that were done in 2019 Q1. And if you fast forward to Q1 2020, relatively similar. And then when you look at Q2 and Q3 of 2019, you see a bit of a drop off. So that's the uncertainty, people doing a wait and see approach. When you get to Q2 2020, you can see a significant drop off. People are definitely not comfortable moving forward. It could be because of bank financing or just plain uncertainty. But when you look at the tail end of 2020, Q4 2020, for example, you can see that there's 117 deals, which is more than any of the earlier quarters reported. So there's that release of the pent up demand. So that tells us, we look at this as an indicator that, you know what, there's an appetite. Deals are starting to come back. There was a pullback, but there's no reason to believe that deals won't continue moving forward. And if you look at the second line, the total enterprise value over EBITDA, I mean, this is the valuation piece that we spoke about earlier. You know, in 2019, you're looking at an average valuation around 7 times EBITDA. You know, it's relatively similar in 2020. And that again is due to a couple of factors. One is you've got more buyers looking at a smaller amount of quality businesses, and you also have banks continuing to lend money. The third line down, you'll see that that's really another key piece that we look at. What's the bank's appetite to loan against these transactions? And what you can see is there's been a bit of a pullback. In Q4 2020, you're at 3.8. Third quarter 2020, 3.7. Prior to that, 3.3. You can see part of that is a bit of a pullback, whereas you're looking at kind of a 4 times in 2019. And so what I would say is, generally speaking, what this tells me is there is an appetite and it's coming back, but there is more case by case and due diligence being done on the banking side. So if we talked about the outlook for M&A in 2021, what I would say is there's still some uncertainty in those industries that are about to bounce back, and there's confusion and chaos. But it's certainly not where it was in 2020, where there was no vaccine and there was no light at the end of the tunnel at that point in time. Now there is more certainty. We saw it in 2020, at the tail end of 2020, and that's driving a lot of optimism in 2021. We've yet to be this busy. In fact, you know, there was a bit of a backlog created in 2020, and it's now creating some good activity in 2021. And it's still a seller's market. I think there's still a lot of businesses that haven't been able to come to market. They're probably not as saleable as they would have been pre-pandemic. And that's continuing to favor sellers at the end of the day. The valuations remain high, and sellers are really not being deterred by going to market. So a lot of positive stuff as business owners, especially if you're in a company that is doing fairly well. The other key piece to look at are really the fundamentals. You know, there's a lot of good support right now in the marketplace for businesses. There's stimulus packages and that sort of thing. But as a seller, you're going to get a good, solid value for your company. There's a good number of buyers. And as mentioned, the banks still have an appetite to fund in the middle market. The other dynamic that has come to the forefront is cross-border transactions. What we've seen is the global supply chain has been somewhat shattered, where everyone is dealing with the pandemic differently. And private equity groups in the US and companies in the US who've got a growth mandate are now saying, where's the best and safest place to grow? And previously they may have looked to Asia or Europe, and now they're saying, well, you know what, there's a strained supply chain, perhaps we can't source product there, maybe we need to look somewhere closer to home. And Canada happens to be that place where they're looking across the border and saying, how's Canada doing? What does the economy look like? And we're seeing a lot of interest in the manufacturing space from American private equity groups. There's always been an interest, but I would say it has certainly grown. US and Canada do business very similarly, and we anticipate that this is going to be, a trend moving forward where there is going to be a lot of demand coming from the US side. And I think, it is logical. The Canadian dollar is lower than the American dollar, so it is favorable to come and purchase at a lower price. The multiples are typically a little bit lower in Canada as well than you would see in the US, and that's going to drive up some interest. So it'll be really interesting to see what things look like in the back half of 2021. The big piece too, Natasha, that is worth noting is you mentioned distressed companies, and what I've heard from various folks that cover off corporate reorgs and insolvencies is that typically you're going to see the fallout a couple of years after the pandemic. I think there's been a lifeline sent by the government to a lot of business owners. So perhaps some of them have a longer shelf life than they otherwise would have, and it's probably propped up a few business owners. I would imagine the next couple of years we are going to see a bit of a fallout. Tax rates may change. I think the interest rates may go back up. All of this stuff is going to affect distressed businesses significantly. So for those who are looking for opportunistic transactions, there'll likely be more so in a couple of years' time versus looking in the current state.
That's a great point.
Yeah, and then closer to home, I have to say Ontario has actually weathered the storm quite nicely. We're seeing a lot of activity in Q3, Q4. Alberta, not so much, especially because they're tied to the oil prices and that sort of thing. So it's a good time to be in Ontario. We're seeing a lot of buyers from the West Coast look to Ontario. The engagement process, for the most part, that's something to think about because it has been impacted, is how long does it take to close a deal if you're going to market? And we have seen some delays also in not only in 2020 when there was uncertainty, but right now in 2021. And what's driven that has really been the increased due diligence by the buyer and the lender. Banks have really been prudent at looking at things they had never looked at before. Maybe the environmental is being really scrutinized. Maybe the level of profitability is being scrutinized, and they're asking for things they didn't ask for before. So we're seeing a bit of a delay on the closing of the deal, but for the most part, there's still funding. It's just they're trying to figure things out too on their end, as the rest of us are as well. Yeah. There is still uncertainty, obviously, in the future with lockdowns and stuff. Obviously, that can change a deal overnight. If you're a business that's open, like I think of hair salons, for example, they are open one day and the next day they're closed down. And if one of those were in market and they had a buyer, funding could have been pulled that day that the lockdown occurred, right? So these are things to think about depending on where you're looking to acquire or if you're looking to sell. These lockdowns can be significant and it can affect the transaction. Overall, though, as I mentioned, the valuations are stable. We tend to look at things pre-pandemic. If pre-pandemic is forecast to look the same as post-pandemic, I think that is the best time frame to look at. If the pandemic has crippled the business and that is the new norm, then obviously you should account for the pandemic. What has changed and what has really allowed buyers to continue moving forward and making the deal is the earnout piece. If things haven't fully rebounded, earnouts is a good way to bridge that gap. You'll get, let's say, the first 70% of the value up front. If the business hits these targets and rebounds back to the historical levels, then you'll get the remaining amount. And that's really allowed people to feel comfortable moving forward and getting deals done. So I would say that's probably the biggest piece that's impacted sellers is the deal structure. Prior to the COVID, earnouts, were frowned upon. A lot of people thought it was a swear word. They wouldn't want to hear it. Now it's become a bit of a norm.
That makes a lot of sense.
Yeah. If I'm a buyer, I definitely would be looking at putting an earnout in there. I know banks too like to see it. If they're holding 60% of the risk, they want to know there's some recourse. Yeah, I mean, from us personally, Portage, we've seen a lot of activity. We've had buyers come to the table and say, "Hey, help us find a business." We've also seen a lot of sellers say, "I'm ready to move forward." And we look at that activity as a signal as to where the market is. We've also seen more quality businesses now say, "You know what? This COVID thing isn't going away. I'm not going to run my business for the next 2 years to get a clean set of financials and then sell. I'm going to investigate today." And I think that is the right approach. If they've got good advisors, they likely will be getting that information that the values have remained really strong. You don't need to wait for a couple of years to get 2 fresh years on your books. A good valuator will understand how this stuff works. Overall, we're very optimistic for 2021. I think there's good activity in Niagara and the GTA. In fact, we've added to our team just to anticipate some of the growth that we're experiencing.
It's really good, really, really great points. Also that the market is pretty optimistic. We're optimistic on our end in terms of the economy remaining pretty stable, just given kind of government indications on continuing to provide support, continuing to support kind of low interest rates to support the economy as well. We're pretty confident that way. And it's a good point of just not really waiting for the perfect time. I know for a lot of my clients, I'm sure a lot of your clients, there's never the perfect time to look at selling your business. And if you're in a high quality industry where you have your case for, we have this little blip in earnings, but we've surpassed it, or it's not something that's going to persist, then really, are you waiting for the perfect time? There's kind of never that perfect time. So
that's a good point. I mean, I know we talked about this scenario before, but I mean, you almost have to look at the overall picture, right? I think about the business being one aspect of someone's portfolio. And, we had a client who, came to us at the beginning of the pandemic and said, "I've taken a bit of a hit. Is my business still saleable? Because if it is, what I'd like to do is sell, invest in the market, and then, pick up the balance when the market rebounds." And I thought that was such a great approach where they're thinking strategically and they're looking at the overall picture saying, maybe my business is down 10%, but if I can fully divest, perhaps I can be further ahead at the end of the day. And they had great advisors who, made the suggestion, did the analysis, and came to us and said, if we can get this, we believe we're going to be ahead of the game. So why delay? And it actually expedited their retirement. So I thought, wow, what a fantastic way of tying their personal plan with, their overall objectives at the end of the day.
Yeah. Great. So that's kind of wrap it up. Thank you so much for your time and for sharing all of your analysis and all of your work that you do regularly for your clients and for your partners' clients. So thank you.
Thanks for having me. Yeah, and if anyone wants the presentation or is interested in chatting, always happy to pick up the phone and chat, or they can send me an email. But yeah, thanks again for having me, Natasha.
Great. Yeah.